Here at Insightful Value, we love companies that operate behind the scenes, especially when their stock price takes a dip and nobody seems to notice. Right now, Science Applications International Corp, or SAIC, is trading lower, and we think it deserves a closer look. This review is for informational and educational purposes only and is not financial advice. SAIC is a leading technology integrator that serves the U.S. government with a focus on national security, defense, and space systems. They're not building flashy consumer gadgets, they're working on mission critical IT, cybersecurity, engineering, and digital transformation solutions for federal agencies like the Department of Defense, NASA, and Homeland Security. In other words, they operate at the heart of America's most sensitive and high budget operations. SAIC generates over $7 billion in annual revenue and maintains a strong presence in long term government contracts. Their business model provides solid visibility, and recurring contracts help reduce risk. The company recently reported steady performance with a strong backlog of nearly $24 billion. That backlog represents future revenues locked in from multi year agreements, something investors often overlook. Margins are generally tight in the government contracting world, and SAIC operates on an operating margin of around 6 to 7%. But the company has been managing costs effectively and returning capital to shareholders through dividends and buybacks. Its dividend yield sits around 1.7%, and it's been consistently repurchasing shares. From a valuation standpoint, the market seems to be pricing in concerns about slower contract growth, potential federal budget tightening, and execution risks in large scale technology transitions. As a result, SAIC's stock is trading below its historical earnings multiple, something value investors should pay attention to. On the opportunity side, SAIC is investing in areas like space systems, cloud modernization, and artificial intelligence integration, fields expected to see significant federal funding over the next decade. Their acquisition strategy has also helped strengthen their capabilities and scale. However, there are real risks. The company is heavily dependent on federal budgets, which can shift based on politics or economic conditions. Competitive pressure is intense, with players like Leidos, Booz Allen, and General Dynamics all vying for the same contracts. And while SAIC has strong relationships, winning and retaining contracts is never guaranteed. Still, when you look at the fundamentals, the consistency of revenue, and the long term tailwinds in digital transformation and defense tech, SAIC starts to look like a steady compounder hiding in plain sight. At Insightful Value, we specialize in uncovering overlooked companies with strong fundamentals and misunderstood potential. We simplify the key data and give you the real story. No fluff, no noise. Whether you're new to investing or have years of experience, our insights are built to help you make sharper, data driven decisions. For more breakdowns like this, visit insightfulvalue.com. And if you want to stay ahead of the curve, hit subscribe and turn on notifications. We're constantly digging up under the radar value plays like SAIC that deserve your attention.